Welcome back, everybody. It is Money Mondays with your hosts, Ben Suttles and Ferris Musa.
The charming Ferris Musa.
Oh.
That said, Money Mondays, we do this every Monday, 3:30 Central, and we're here to talk about all sorts of topics. If you have comments, questions, thoughts, ideas, leave a comment. Happy to talk about them. But that said, Ben, what are we talking about today?
What we learned from our biggest deal, folks.
And really quick, big means a lot of different things.
Yes.
So what would you say, I'm curious what Ben's input is. What would you say our biggest deal is today?
Well, it's a property in Austin.
So you're going to say, okay, so you're talking about dollar number.
Yeah,
dollars,
that was
the big is what you look at as, right?
That's actually a good point. We didn't even think about that. I was thinking about it in terms of dollars, right? You know, but we also have a bigger, larger property in terms of unit count than that. It's a property here in Houston.
How many units is that one?
So that one here in Houston is 530. The one in Austin is 369.
So big can mean different things to different people, right? So understand what you're talking about. So again, we learned something, I'd say, from each of those, right?
Actually, let's go through both. We have enough time. Let's do both. We can do it quick, folks. So what we learned on our biggest deals, not deal, but we're going to go ahead and get right into this. All right. So questions that kind of come in, how do we identify these opportunities, right? So how do we find deals?
We basically go out, shake trees, kiss babies, shake hands, a little bit of everything.
We're not shaking babies.
Yeah, we're not shaking babies. But, it's really get to know brokers, right? And this is where I would actually say to this question, one of the biggest things we learn is your reputation needs to precede you, right? Yeah. The brokers need to be able to go to bat for you, right? Once you're doing larger deals, it's no longer, about, hey, is the price right? It's really about, can this person perform? Does this person have a track record? Are they reputable, right? Can they get the deal done? That actually means, right, really on these larger deals, probably more than the price point.
If all things are considered, if you're within 5, maybe even 10%, of somebody that's more, I guess, reputable or they've transacted with, they're probably going to give them the deal because there's just so much riding on this if things don't close, and that's going to make the broker look bad. They might lose the listing altogether. A lot of bad things can cascade around from that if it doesn't close, right? Yeah. But this is actually, these two deals are actually somewhat, because they're both from CBRE. Right, so a brokerage.
Actually, they are. I did not put two together. So.
And then this is a good way how to tie them together.
So the first one, right? We had done the deal. We knew the broker. We hadn't transacted, but he knew us well enough, and he went to bat and essentially said, "These guys can get it done." Yep. Got it done. The second one was even a larger dollar amount.
Yes.
And that broker called the first broker as a referral, and they spoke our praises. And so again, your reputation needs to be built up, right? Because anybody can figure out how to do a $2, $3, $4, $5 million deal, right? Not many people can do an $80 million deal, right? So a lot to think about. Each thing kind of has its merits, and so you got to start to really plan and build up for that accordingly.
No, absolutely. So, right, as far as kind of the due diligence that we kind of go through, and it doesn't really matter if it's the biggest deal or the smallest deal, folks. We do the same stuff throughout the process, right? We nurture our relationships with the brokers. They send us deals. We underwrite the deals, right? And we verify our underwriting numbers through our team, right? From our property management to our insurance broker to our mortgage broker to everybody in between, trying to validate our assumptions within our underwriting. And then from there, we determine, hey, are we competitive? Are we close to what the broker's asking? Right? And if so, we're trying to develop a strategy on how we're going to win this, right? Again, it takes a little bit of politicking. People don't realize it's not just like, oh, I'm never going to talk to the broker. I'm just going to blindly submit an LOI and hope for the best, right? You're probably not going to get a call back, let alone win the deal, right? You need to be talking to the broker. Hey, where offers kind of coming in at,
Talk about what you like and don't like in the deal, right? Because again, things start to make sense, and whenever you're near that finish line, it's about giving the broker the ammo to help go sell you.
Yes.
Right? That's what a lot of it's about. And, there's an art to name dropping and talking about other deals. And, the broker, really, them getting to know you is them trying to understand, if I went to bat for this guy, can I get that done for you? And
actually, this is a good point. So, we bought the CBRE deal, which was 530 units here in Houston. And then, 2 years later, we're buying the Austin deal through another CBRE team. Well, guess what? They didn't really know us, right? And so we actually name dropped the CBRE guys back here in Houston, both the mortgage broker and the investment sales guy, and they both went to bat for us. They're like, yeah, these are great guys. They're going to get it done. So having those inner, brokerage offices, they all kind of know each other, or they at least can get to the right person. You can always have them help you kind of, get past that who the heck are these guys, right? Well, I know so-and-so in this city. Let me make you an introduction. And they'll be like, oh yeah, they're good guys, right? That happens more often than not. And in fact, if you're not even doing it, trust me, they're doing it behind your back and trying to find out who the heck you are.
They're absolutely fishing around.
So don't think but you should get ahead of it and say, okay, hey, this person can vouch for me, this person can vouch for me as being a good guy. Now it doesn't really, it holds a little bit of water if it's another brokerage with another one, but it's still better than nothing. Right? But our due diligence process is the same, right? You underwrite the deal, you see if you're competitive. If you are, you submit an offer, right? And then you go through the traps of, the best and final process and everything else. So, moving along. What were the key components that made the real estate deal the largest in your portfolio?
I think we said that earlier.
We just talked about
price
it, right?
and unit size.
Yeah, so you can look at
maybe there's another factor, maybe the most amount of square footage, which usually ties to the units. But
or you could even say the most equity.
Or the most land mass.
Or most land mass too, right? So really, it's in the eye of the beholder. Yes. Don't get wrapped up into it.
But I'd say equity's up there with price.
And equity ended up being the biggest one on the purchase price too, right? So the $82 million deal that we had, we couldn't save your design, but at the end of the day, the equity is a big thing too, right? Yeah. $40-something million was how much we raised for that same deal. So, so that's kind of the key components, right? Yep. So kind of think about that.
And really quick, operationally, right? Would you say, let's say closing, was it easier or harder with a bigger deal? And then operation was easier or harder?
Operationally, it's supposed to be a little bit easier, right? Because you have more economies of scale. There's more money that you can pay, good staff. You're going to have some cash that you can spit off, right? I'd say to get it closed, the $82 million deal was last year, and obviously everybody knows that last year was a very challenging year to be getting closed anything. But, I would say otherwise, actually probably ends up being easier in a lot of ways because more lenders are going to go after those deals because they're bigger, they're meatier, right? And then typically, especially if you're going to go after kind of more institutional equity, you can also just go and probably grab more institutional equity that way too, right? Because it's a bigger, meatier deal, just like the lenders, right? Now if you're syndicating all of this, obviously the bigger the raise, the more challenging it becomes, right? But we got it done. I think we ended up raising $41 million, on an $82 million deal. So very low leverage, on the deal, and really, really excited about that one. So,
but operationally, it's probably a little bit harder. Right?
No,
pros and cons. Some things. Let me rewind. It's easier, but more things can go wrong. Because you're turning 30, 40 units a month, right? That's significant.
Yeah, there's things you have to dial in, right? And it forces you to dial some of that stuff in. And that's fine, But I would say I'd actually probably have the flip side of it. I'd say in some ways, if you can dial that in, that the economies of scale outweigh that. Because again, if you get a couple 300-400 unit properties all in one area, now you have some economies of scale, and you can get great property management staff, and you can share resources too, which is important. So. What were some of the significant lessons you learned from this investment, and how will you apply them to future real estate investments? Well, that's a good, I would say actually both are pretty big deals, and that's something to kind of take into consideration. One was, a big play in Austin, and Austin just has big pricing. The other play was probably on the bigger side. The unit count is probably on the taller side that I would probably say that we would do. Yeah. Right. 530 units is probably where I'm maxing out at because there's not a lot of people that are going to take that on. Right. Most of the time, especially in the syndication space, everybody's between 150 and 350. Like that seems to be the sweet spot. Below that, typically more mom and pop. Above that, it becomes something different. Right. Where you're almost buying a small city. And so you have to kind of take that into consideration, big purchase price obviously equates to a big equity check, and 41 million, that stretched us about as far as we could go on an equity raise, and so you just got to take that into consideration too, right? Don't get into something that you can't bite off, because again, going back to what we said earlier, folks, right? If you burn that bridge with that broker and you can't close, you were essentially
scarlet letter.
You're going to have a scarlet. It's going to be very, very hard for you to do a deal with that person, because they're going to think about that fee that you cost them, the reputational points that you cost them, and that's a problem for people, right? So you'd much rather just put in an offer that you can achieve, or just walk away and just say, hey, it's not for me because of these reasons, right? It's better to do it that way, right? But We talked about this a little bit. How did you manage the property and tenants to ensure a successful and profitable investment? So,
You know,
we're
no
going
different
through
than the
it.
other stuff. It's a business plan you work on, right? You know, it's same business plan, just different amount of dollars, right? And you know, it's bigger dollars, bigger number, bigger price point. And so working through it, making sure you have the right people, right? A manager that knows how to manage 200 units is not necessarily the same manager that can manage 500. With 200
actually a good
units, you
point.
can kind of stumble your way, you know, but with you doing it, with 500 units, you have a team. You need to know how to manage a team, an effective team. So it is actually a very different manager, different set of skills. So something to think about.
I actually agree with that, right? Like, you know, I mean, like you can throw most people into 150, 200 unit property, right? You know, in the property management world, you know, 3, 4, 500 units become something different, right? You know, I'd also say, you know, the other thing to take into consideration, both these had a value add component, a pretty big value add component. You have to make sure that your management company and the people that you have on site know how to manage when it's under construction. Right? Because what are you trying to do, right? You're adding millions of dollars into it, you're painting it, there's all these contractors on site, there's all this work being done, you have people coming in saying, oh, my tire got popped, or they sprayed over my car, or something happened, so you're dealing with tenants that are already up frustrated. On top of that, you're also trying to upgrade units and getting a different tenant profile in there. So you have to be able to manage all that chaos. It's a lot going on, you know, but unfortunately, you have to kind of do it all within the first kind of starting 6 months, because you know the lender and the bank is expecting you to kind of go and execute your business plan. So are your investors, right? So you can't just like, oh, I'm going to ease into it and you know we'll do this stuff next year, no big deal. No, you have to start doing it, right? You know, and again, I you know when it's regardless if it's a big property or not, right? You know, you're always got to deal with some tenants and making sure that they feel like it's their home, right? You know, and that you're approving their home. You're making it better. You're making it safer, right? And I think if you sell that vision, right, you maybe get some mock-ups. We always like to kind of put mock-ups of what things are going to look like, you know, in like the office and stuff. So that's not even necessarily just for the new tenants. That's for the existing ones too. Like, look at how beautiful it's going to look, and look at the units that you could potentially transfer into if you want to stay on the property. And we're going to add this amenity and that amenity for your children and your family. People love that stuff. They want to know why they might have a rent increase, right? So you want to show them the vision and what you're trying to do, your business plan, right? And I think if you get their buy-in, right, you'll have less turnover, you'll have people more apt to stay in at the property and eat that rent increase, right? So, boom. What advice would you offer to other real estate investors looking to make a significant investment in their portfolio? I think we talked about that, right?
Yeah, build your reputation, build your brand, get to know brokers, and help them help you.
Yeah, and don't bite off more than you can chew. That's the biggest thing, right? You know, I mean, we're talking about big deals today. You know, again, that's relative. You know, maybe a big deal for you is, hey, I want to buy it on my own, and maybe a $3 million deal is a huge deal for you because you're doing it on your own, right? Just be careful, right? You know, and I'd say if you are doing it on your own, don't put all your eggs in one basket either, right? You know, if you've got all your money tied up in that one deal, what if that one deal doesn't go well?
Yeah.
Right? You know, it's a very illiquid investment. Unless you have a refinance or a sale type, you know, transaction. That doesn't happen every year, right? So, boom, we got through that. All right,
absolutely.
Take it.
So what's coming up August 5th, right? It's our big conference.
I'm excited about this. San Francisco. So we're going to be out in Cali on August 5th. 400 plus attendees. We're already selling tickets like crazy out there. We have a bunch of great speakers, a bunch of great panels. We might do some more Ignite presentations. Who knows?
We'll do some more Ignite.
We're going to get crazy with it. We're all, you know how if you've ever been out to any one of our events, we always do something different at these MFINs. It's not the same thing, right? But we want you to check it out. So register today, www.mfinvestornetwork.com. I'm pretty sure we got a coupon code. Disrupt still work?
Use the coupon code DISRUPT.
Use the coupon code DISRUPT.
Use the coupon code EARLYBIRD as well. So go
or
check them out.
EARLYBIRD if that one's still alive.
We'll make it happen.
But check that one out. And we'd love to see you out there. But what are we talking about next week, my friend?
We're going to have to keep it a surprise. So let's let people figure out what we're going to talk about, and we'll make it fun.
So tune in.
Tune in, check it out. We look forward to seeing you guys next week on Monday, every Monday, 3:30 Central.